Hey everyone, welcome back to Crypto Cash. Thank you very much for joining me here. I hope you're having a fantastic day. We're taking a quick look again at Bitcoin. And if you didn't catch this here, the reason for the price drop was pretty simple and straightforward. It's a major fundamental catalyst. That was like the Israeli-Iran war. I think Israel declared war on Iran and pretty much just got out of hand. So as I mentioned last night, as soon as that occurred, close your longs, wait 24 hours, maybe even just wait out the weekend so you can be in a better position to make more of a realistic trade instead of trying to guess which way it's going to go based on stupid fundamental stuff. So just keep that in mind. That does affect things. So what we're going to look at today is mostly just reinforcing areas of support or just kind of reiterating that rather, and then obviously talking about best practice in situations like this, because if you are going to trade, there are certain things you want to pay attention to. So let's take a look at the liquidation data first, kind of go from there. If you could, please hit the like button, comment below if you could. That really helps grow the channel. Unfortunately, YouTube sucks with the algorithm and doesn't recommend me for crap. So let's take a look here at Bitcoin. Back in liquidation data on the left-hand side is essentially last 7 days, kind of letting us know that every late long got absolutely demolished, right? So we talked about this 103K was a potential reality for us. We came all the way down as low as 102.5, okay? So market makers made a ton of money on that one. Anyways, all that being said, we take a look at the macro, we're still kind of in the middle of this range between 100,000 and 112,000. Albeit closer to the lower range, but still kind of in the middle. So keep in mind, there's a significant amount of liquidation between 98.5 and 100,000 even. That is kind of a macro perspective, and this is what wars will do to you here. 25 billion in short liquidation delta. So this leads me to believe we might see a bit of a short squeeze here soon, where market makers see this chunky amount of people shorting the market, pump the price really quick and dump it again. So if we do see an increase in value this weekend, I would be willing to short that, but I think it's too late to short or too early to short. Depends on how you look at it. But at this exact moment, I don't think it's a good call just because we're at a tentative bottom. But we also got to understand our previous support levels are new resistances, and we got to be aware of that. But from a macro perspective, open interest implies that we have nothing but resistance above us. In other words, there's a lot of positions at this 106K range. That's why when we saw it first little pullback, the price held there pretty well. It was unable to sustain that level, obviously. Now, take a look here at open interest in the last 7 days. We can see 105K. People are adding to their position here at 105,000. So I don't really love that. I think it's a bad idea to take a long right now. Okay, so let's talk about this here really quickly. Just to note, previous support turned into a resistance. So this is now a resistance, okay? So we just kind of got to recognize that we're in a position right now where it's best to not be like super bullish in situations like this, because it's just not, I mean, the likelihood of the price just going instantly up here is pretty low, all right? So that being said, previous support turned resistance. That's a very common thing in trading. So we can presume 105 to 106.5 is that new area of resistance. So if we get lucky this weekend and see a slow call back up to the 106K range, that's going to be something I'm going to be looking for a consideration on a short. All right. Just because in general, when these kind of fundamental catalysts occur, you'll generally just keep seeing bleed outs and dead cat bounces. So it's often for that to happen. In fact, you could even argue we already saw a dead cat bounce here just a moment ago. Having said that, take a look. We're still above 30 in the RSI, so nothing super crazy here. These are all bearish signs, obviously. Nothing like that's hidden or, crazy weird. I'm sure there's probably some people online saying we got hidden bullish divergence or Elliott wave theory. We're in wave 16 of 34. All that stuff doesn't really matter in these situations. Okay, fundamental catalysts really just screw all sorts of TA up, and the thing that you want to recognize in these situations is just understanding where the confluence is. What are confirming factors at specific levels? So at this point here, we can see the 50-day SMA on the daily. We're still working our way up on this ascending trend. Technically, we haven't broken that yet, so we're not like fully bearish yet. But I would say it's safe to presume we lose this 103K range. That I think the 100,000 to 98K range would seem like a sensible next stop. But at this point, we have lost 50 on the RSI, so that is not a great sign. Stochastic swinging down. There's more bearish signs implying we're going to go further down. So really, I know it's not rocket science, but those are just kind of the things here. So the best call in this situation before you consider a long is to make sure that we break our descending trend, which I'll go ahead and post our playout chart on our Twitter, Telegram, and Discord. But to give you some perspective, we're kind of in like a type of triangle pattern, and oftentimes these will these will work themselves into something along these lines and break down just based on how it originated. Okay, so this is not a bullish sign whatsoever. If somebody else says that, I don't think they know what they're talking about. Once more, fundamental catalyst. Simple, plain and simple. Try not to trade these kind of situations. The only thing I'm considering is possibly, once again, a short if the price were to continue a little bit higher. Truth is, we do have some support in the area that we're in right now, but you know, it's just not good. All right, so no trade is the best trade, folks. I hope that makes sense, and I'll go ahead and send out once more the playout chart on our Twitter, Telegram, and Discord. Look forward to seeing you in the next one. Have yourself a great rest of your day. Take care.